All right, so here we are again with our second IPv4 Ecosystem Insights webinar. And today is going to be a special one because we have a special guest, Jake Brander from Brander Group. Jake, perhaps you want to say something more about yourself?
Sure. We've been in network and infrastructure for about going on 20 years now. It just makes me feel old. Uh, and we specialized in, internet connectivity, security, cloud, data center. And in the last 7 years, 8 years, we've been heavily involved in IPv4 transfer market, which is, why I think why I'm here is to help kind of understand the difference between leasing and the sales market. So excited to add some of our insights.
Sound good. Thanks, Jake. And my usual colleagues with who I do our webinar, Paulus.
Pleasure seeing you, everyone. Hi, my name is Paulius Sudickas, VP of Strategic Alliances here at IPXO. Pretty much similar to Jake, I've been involved with IP addresses for almost 7 years now, but what differentiates me from Jake's experience is that we are more specializing into IP address monetization and leasing. So,
Right. Edvinas.
Hi everyone, my name is Edvinas. I'm leading the growth of IPXO with our sales, account management, and marketing teams. Been in this business networking data centers for quite a while. At IPXO for almost 3 years now.
Thank you, Edvinas, and myself, Vincentas Grinius, the co-founder of IPXO. So today we're going to talk about more broader way of what is happening within IPv4 ecosystem. And let's get started. So as for, our usual things that we do during those type of webinars, let's run the numbers, and then we're gonna have some discussions about the opportunities, about the challenges that we have. So perhaps, Paulus, you can give us more numbers on what is happening around the IP leasing world.
absolutely, Vincentus. So first of all, we can take a quick peek into short transfer market recap for 2022 to 2024. While we saw, a slight decrease in the overall volume of IP addresses being transferred, what differentiates last year from previous years is a huge number of mergers and acquisitions. So most of those happened, well, actually not most, all of them happened within the same registries. So technically no IP addresses left the registries in terms of M&A. And I'll give you more details about the IP address inflow and outflow within the different registries. So as you might
And
see,
perhaps
yeah,
Jake also can comment on a few bits where he sees a value on giving us more information, because I
oh
think
yeah,
that audience definitely wants to hear a much broader picture around the market.
yeah, absolutely. So whenever you feel like it, Jake, step in.
I
Uh,
if
mhm,
you if, I do have one quick comment on the previous slide.
sure thing.
This is total volume, as in total number of IP address transfers,
Correct.
as in the total IPs. So this is an interesting chart because it looks like the market itself has been declining. However, what really had occurred is the total number of IP addresses declined because of a few large players in the industry that that comprise of most of the IPs that are being transferred. However, last year, towards the end of 2024, the number of transactions that we did increased by like 30%, meaning while the total IP addresses was still kind of looks like it's decreased because of the large players that were buying, the number of companies involved in the market increased significantly in the last 6 months. But that doesn't reflect in the total number of IPs because they only make up a small percentage of the number of IPs being transferred.
Good insight. Thanks. Um, okay, moving on. So as I mentioned, we're gonna look into inflow and outflow of IP addresses within different registrars. So those who have watched our previous webinar might remember these statistics. So not much change in this regards as well. So RIPE is currently the only registry that is growing in size in terms of total IP addresses managed by a single registry, while all of the other registries are bleeding IP addresses slowly. And I remember during the last webinar we discussed potential reasons for that. And correct me if I'm wrong, guys, I think we settled on a couple of points. First of all, RIPE being the most forward-thinking registry, the most lenient policies, as well as, especially in terms of large IP inventories, pricing for LIRs.
Basically,
So
the membership fees.
exactly. Because other registries are charging by inventory size, while RIPE has a fixed fee for every LIR. Well,
And probably,
and
Jake, you perhaps will have a few points here. The legacy space is also one of those things that actually keeps Stripe getting more IP addresses in the region, right?
Yeah, the legacy space is probably the most important in RIPE because it's far more flexible than every other region, uh, and uh, and everybody moves to RIPE. Well, not everybody, but a lot of people move to RIPE from other registries for the reasons you just mentioned. Right? They're far more forward thinking, lenient transfer policies, and their fees are set. Right? It doesn't change. But as far as legacy resources go, a lot of companies do move them there to have a little bit more flexibility.
understood.
Exactly. Exactly.
Exactly. Okay.
So,
Mhm.
yeah, Paulus, go on.
Go ahead. Sure. So the next slide is pretty much tailored specifically to Jake. This is the price overview, at least, the public data that we have accessed. Monthly average price per IP, depending on subnet size. And Jake, I'm gonna hand the microphone to you on this one.
Yeah. So the data is pretty interesting, and it was kind of a prediction, anyways. We call them the large cap subnets, which would be the /16s and larger. Were only being acquired by a small number of companies last year, and they caught wind of this and decided to bring the prices to a more controllable level, because obviously they're spending hundreds of millions of dollars per year, and they're the only ones that had access to cash. The interest rates did not bother them, so they brought the pricing down quite significantly last year, and that's reflected in the chart to be similar to the rest of the market. What's a little bit more difficult to see here, though, is that towards the end of last year, let's say Q3 and Q4, the mid-sized subnets and smaller subnets, so anything we consider like a /19 to a /24, the number of transactions increased, like I said earlier, by about 30%, and those prices actually slowly increased. So from our perspective, we control, I would say, probably around 30% of the global transactions. And a lot of our sales were actually happening below $30 an IP. So we had access to subnets at $25 an IP for a majority of last year, actually. But towards the end of last year, those were all sold out. So on our chart, the price actually dips in about, for the beginning of the year, it dips down to the 25s and it stays down there or goes up and down, and then starts to increase towards the end of last year, where prices are probably more in the $30 to $35 range, as last year they were probably more from 25 to like $31 an IP. So that's really the most interesting trend.
So my question is, what do you think? Would the prices will go up steady again, and will gonna grow to the same levels as we were like 1.5 years ago?
That's a good question, and this is going to be on a recorded podcast, so we'll see how good I was my prediction. But the this is not, I don't know if everybody knows this, but the US government is subsidizing $42 billion in network development. And this money is going to be released by each state in the United States over the course of the next probably 3 to 5 years. 3 of the states already released funds and awarded them to multiple customers that we work with. And this is in the tune, let's assume each state gets about $1 billion. That is already started making an impact in the number of /16s that we've sold just in the last month. It was a lot. So the way we look at it is the market will certainly increase this year. It's tough to say where the number will end up on an average, but we feel that the average price point will be closer to about $35 to $37 an IP, and it will steadily increase through the remainder of the year.
Is this for like a smaller subnets or /16s and up?
So the smaller subnets are already rising. They've already been kind of getting closer to the 35 to 30, or 30, $33 to $36 range, as an example. The /16s, they're limited in nature. I mean, there's only a certain amount that even we have in inventory, let alone the global, the global market. That will happen a little bit faster, because once they're all out, then every ISP that needs /16s will be struggling and scrambling to get one. And then whatever seller has one available, they'll basically control the price point, which we saw happen in 2020 when prices doubled in 1 year. And at that same time, the US government had released what's called RDOF funding, and that was $20 billion for the same purposes of helping build network all around rural areas of America. So we're taking all that data and saying we're seeing the same exact trend that's going to occur over the next 2 to 3 years. And the /16 market will, in my opinion, absolutely reach the same exact numbers as we were at before, which is around the $50 price point. And that will happen a little bit more, like I said, quickly, because there's so few of them available. The other bets, they'll gradually rise over the course of the year, probably maybe end up at $40 an IP towards the end of the year, but probably closer to like the mid 30s or like mid to high 30s.
A challenging question, but we also do not have to forget about the pandemic period, when actually everyone was moving, to the digital world, and even Zoom at some point, video conference companies were, at a high peak of their evaluation. So what about that?
Yeah, I mean so the contributing factors in 2019, 2020 to the spike of pricing were there are several. The pandemic, everybody overpurchased because they didn't know how many more customers they would need to support, right? Low interest rates, we were at 2%, 3%, $20 billion being ingested into the US market to build a network. And also there was a shortage of /16s at that point. So anytime we had one for sale, it was already pre-sold. And at that point, the larger players in the market, they were purchasing everything you had as soon as you had it. Whereas last year, they were a lot more selective in their purchasing habits, and we're only focusing on specific, volumes of IP addresses.
Mhm. I have a question
Okay.
about this as well, if I may. So, how did the supply change for large subnet 16s and up? Because I've heard that theory that, whenever pandemic just hit and whenever the demand for large subnets grew exponentially, the companies weren't yet ready to sell the IP addresses.
Yeah,
Although, as the year passed, companies renumbered, freed up their resources, and by the time they were done, the
yeah,
prices have already started dipping, and then, the market was a bit overflooded with large subnets.
yeah. So that's actually, I'm glad you asked that. I forgot about that as well. During the pandemic, everybody took their resources and they were focusing on moving everything to digital, right, to support their work from home client base and their work from home employee base. There was a large shift. So the resources that were being used on renumbering IP addresses were reallocated to control the pandemic. Then when prices doubled was around the same time where companies were getting control of that, right? They were already in a point where they felt comfortable. So then they started to quickly reallocate those resources back to readdressing because the numbers doubled. So, they doubled. It went from 25 to $50 an IP in 1 year, and they wanted to capitalize on it. And many did actually, because they were able to quickly readdress. So the prices only started to decrease like mid 2020. While it looks like 2020 was it started falling in the beginning of the year, it was a pretty gradual decrease in those price points. So a lot of companies did capture that upside.
Okay, thanks.
Sounds good. Do we have any discussions left on the acquisition market?
I think we're good for now. We're definitely will come back to the topic.
Definitely. Let's move on.
Sure. So now let's step into the statistics of IPXOs, IP leasing, and monetization marketplace. So first of all, what we have planned to do and whatever we, notified our watchers and listeners during the last podcast, we're gonna do these recurring overviews of the marketplace. So, those who are, well, keeping an eye on us will have a good picture on how we're growing, what's changing, what's evolving with our marketplace. So first of all, total number of IP addresses. I remember during our last webinar, we had just hit 4 million IP addresses, and we were anticipating to finish the year with around 5 million. We exceeded the expectations of our own. We finished the year strong with more than 5.5 million IP addresses total. And next slide clearly shows the utilization rate for the IP addresses. Because we had a huge inflow of IP addresses on the very last week of 2024, actually a day before Christmas, if I remember correctly, you can see a huge dip in utilization rate. Although since then, we are currently back to 80% again, and we're still going strong with, utilized IP addresses for our IP holders.
And
Um,
we
mhm.
also kind of always discussing, the topics on, what is the healthy utilization rate
Yes.
in the marketplace. And we kind of can't get to consensus, what is a really healthy utilization rate. But what we know so far that the marketplace is growing and it's growing pretty fast. But at the same time, we are keeping on growing that utilization rate. But at some point, there are sometimes projects where, for example, some of the customers are growing steadily. That means that, as from day one, you will sell only, /22 and whatnot. And, if the customers are growing their business, we're getting more and more of those IP addresses. But at the same time, our kind of also responsibility at some point is help to our customers to grow our business. And essentially, when it comes to the infrastructure, to IP transit, we definitely are happy to help, with any advice from our know-how, because previously we were in the infrastructure business ourselves. And also, Jake, you have a pretty long record in IP transit and telecommunications business yourself, right?
Absolutely. Yeah.
There you go. So, I think that we all are in the same boat, and we definitely have to, give a hand to any of our customers, no matter if they do the IP acquisition or leasing IP addresses. We definitely have to support them in any case so that they could succeed moving forward. Sorry for such
No worries.
poetical off topic.
All is good. All is good. My next slide is about IP address breakdown by registries within our marketplace. So again, not that big of a change in the picture since our last webinar as well. Over 95% of IP addresses in our marketplace are coming from either RIPE or ARIN. And again, it makes a complete and total sense because I think it's a bit over 60% of global allocations from all 5 registries were given to RIPE and ARIN. Also, again, we have to mention the policies. These 2 registries are lenient whenever it comes to sustainability of IP resources. So they allow IP monetization fully, while other registries, within other registries, you can only do it with legacy space. And yeah, this creates, again, a discrepancy between supply and demand. So for example, if we take APNIC, for example, the demand is growing at an incredible pace. We have talked with multiple companies within the region. While everyone is short on IP addresses, policies, technically, prohibits other companies from leasing their resources to those in need. So we came to a pretty funny situation where companies are better off with simply announcing the IP addresses to keep them shown as in use, rather than keep those unannounced and potentially risk having like coming into the situation where we'll have to return the unused IP addresses to the registry if the community would decide so.
I wanna kind of talk a little bit about the actual registry ecosystem. So, as we see so far, RIPE is the most flexible registry. But Jake, perhaps you can answer, this question. What keeps other registries from being so friendly as RIPE?
Well, I think Aaron has a reputation for being the most, this may come off the wrong way, but not the most, maybe the most trusted, but the leading registry when it comes to managing IP addresses. Everybody kind of looks to Aaron to find out what they're doing. On the other hand, RIPE sorry, I'm gonna say every other registry. While RIPE kind of does its own thing, and people like to use RIPE because of the flexibility. However, Aaron still is the most active registry when it comes to, I think, number of transactions in the sales market, number of total IPs in use, and maybe even I don't know if you have the data, but maybe even number of IPs that are routed globally.
Yes, yeah,
Yeah, well,
that's true, Jake. That's true.
that's really obvious reason because 60%, almost 60% of the data centers are in the US. The biggest chunk of telcos are in the States. So it's of course the biggest market globally, but. We will not have to forget Asia. Asia is massive. It's, I don't know, enormous market. But still, from the kind of, from the actual policy standpoint and from the actual kind of obstacles that we hear from, different providers in Asia, it's really a pain for them to deal and with local registries and basically scaling their business.
Well, there's a reason for that. So in Asia, specifically China, there's a big push to move away from IPv4 usage, which is being driven by the Chinese government actually, to move to what they call new IP, which is kind of their own IP system. We don't know how that's going to affect the global market, but that is an initiative that they've tried to push for years now. And then Asia's market, I think largely the IPs exist in China, which regulates its customers, or China regulates the companies from doing what they can do. So that's probably why they're not entering the market, for instance, into the leasing market, and why they're not selling so many IPs. And then also AppNic itself, as a APNIC, it follows kind of Aaron's policy when it comes to acquiring IP addresses and selling IP addresses. So there's a lot of limitations in that market. While it does have a very large number of IP addresses, they're not being utilized globally as effectively as the other regions.
Do you think China will succeed in IPv6 migration?
If anybody can force this type of a global decision, I think China is probably the best suited to do so. I think their initiative said by 2030 they want to prevent
Yeah.
companies from building network in V4, like just completely prevent it. In reality, there's so many legacy systems that are built in V4. I think it's impossible to not use it, but they will likely succeed in preventing the number of companies that are using them moving forward. And that number, I mean, that's going to be tough to say. And we can probably look at the chart of how many V4 addresses are specifically announced in the Asia regions, and just compare it, let's say, just from 5 years ago, and see if that number is significantly decreased.
That's actually a thing that we could examine for our next webinar. That's a good point.
Yeah, I'd be interested as well to know that.
Absolutely. Sounds good. So let's move on.
Let's move on. Yeah. Next up is average price per IP address within IPXO's marketplace. So big number on the top right of the screen. So this is currently our average running rate per IP address that we're seeing. You can see many different colored lines. Those are displaying different registry IP addresses pricing. But again, if I may come back to the previous slide, you might already noticed and heard that 95% of IP addresses are coming from RIPE and ARIN. So those two lines are the ones that controls the average price. So as of today, it's 42 cents per IP. Nothing much to comment about this, I guess.
One question, actually.
Surfing.
This is from 2022 to 2025?
It is up until December 31st, 2025.
Okay.
Yeah.
So I think it's interesting to also note that how do you see the prices being affected this year, given what I said about the fact that the pricing to purchase IPs will increase this year. That's a pretty easy statistic to look at because of everything that's happening in the U.S. market. How do you see the pricing of leasing being affected?
So leasing pricing, we always used to say that lease and selling prices are closely tied together and they move in parallel. What we notice now, especially after the dip in selling and buying prices, is that it didn't really affect IP leasing price. And if we're looking into, zooming out into a bigger picture, let's say comparing, annually 5 years from now to end of last year or today, for example, the prices are gradually climbing up. So that means, there is this disconnect from buying and leasing markets.
Yeah, but I think it also would be correct to say, that since majority of our IP addresses are in Ireland and right for, obvious reasons, we can comment on those two regions. But at the
Correct.
same time, what we see from the leasing perspectives, that actually, when the big players actually are introducing IPv4 pricing fees, or introducing, some upgrades for the pricing. This actually moves quite a lot of IP leasing market, and Yeah, we definitely thought that, the pricing for the IP address, IPv4 addresses, acquisition prices versus leasing, you know, correlate together with each other. But actually, right now we kind of, not considering this to be true. And again, I think that, the more IP addresses we will have, the better information, more accurate information we will have. Because at some point, there are companies that actually, considering buying the IP addresses for, scaling in the future, but right now securing that asset on monetization, meaning that, they would acquire IP addresses, let's say, now, but will use for themselves, in 3 years' time. But until then, they're going to monetize. And they basically, follow the average IP pricing policy that we see, or the market prices. And this is how, the IP leasing rates keep steady and don't change much as the we see the IP acquisition prices.
I would add just a couple of things to this, if I may. From what I see from the team, we see that there is a market for each gap of the price. Yeah, just each bracket. What we see and what experience during the year, that there is like a big player still buy in like low, somewhere like between 30 and 40 cents per IP address.
So,
That's like those,
so
if you want
sorry,
big
Edvinas.
volumes. Yeah.
I have a slide for this.
Okay. So
There you go.
yeah, I can just then continue on this. So the more deals are in the lower prices, but there are some market in the bigger price range and brackets as well. And we saw during the last year, we started probably our main deals in 35 40 cents bracket, and price went up because we had a lower number of IP addresses in our marketplace. The sales dropped a little bit, but then again at the end of the year, we got new inflow of IP addresses in those brackets that are attractive to big players, and then again our sales increased. So I think for big players, especially Asian clients, we see that still the price is pretty low. And it's pretty important, that price. So they're not buying for any price. They still can
Yeah.
find low prices in the market.
And what we also see that a lot of companies still are discovering the IP leasing. Back, let's say 5 years ago, IP leasing was a quite big taboo. And for some of the companies, we needed to definitely educate from, the IP monetization perspectives, what is happening within, and for the leasees, so that it's a safe to lease the IP addresses. So it's still the market maturing the positive way that we see a lot of companies are kind of discovering IP leasing as the alternative option. But there is also one thing to remember. I think that we should see a shift in policy making regarding the IP leasing, because at some point, it's the same resource as many others in the internet, right? I mean, you use, for example, someone's server, renting a server, right? So, it's the same thing as you would, lease your IP address. So that mindset is changing, but, this is why we are here to educate it further.
Yeah.
Also, just I think that could explain a little bit the demand in /24s. I will mention about the trends what we see a little bit later, but the bring your own IP trend is one of the things that push companies to find. Educate themselves about the leasing or buying those smaller IP ranges.
How do you? So I had the question was leading to a bigger part of what what's happening in the IP market is AI and big data, right? How do you see that affecting the prices?
I would say so far what we saw is that drives a demand for lease to get more data. We are just now starting just to feel the inflow of AI agents, or if I can call it like
Startups.
that. Yeah, power apps, where they're using some networks just uh, to go into the internet, and we are forecasting that it will grow the demand for especially for leasing, because those companies, new companies, they grew from and they build everything on a SaaS kind of way. They don't want just to invest capex versus opex. They are pretty innovative companies. So we forecasting that it will drive the leasing and this SaaS type of implementation way.
Excellent.
And
Interesting.
Ednas, you mentioned, a demand for small subnets, specifically /24s. So I brought in some statistics about lease count based on subnet sizes. And well, we were discussing this internally, but we have a strong gut feeling 24s might be leading the pack. But it's leading the pack, well, tremendously. So almost, well, close to 90% of the lease deals are happening within /24s. It doesn't have to be a single 24, of course. It can be, a good bunch of /24s going to a customer at one time. But still, most of the deals that we make is done within small subnets. And
Yeah.
well,
And
you,
this is what actually shows that IP leasing is a /24 market,
exactly, exactly.
because, when companies are planning their network and building their infrastructure, they don't go like crazy, oh, /16, yeah. They actually scale gradually. And, we see that in quite a few cases, the /24 is the king here.
Yeah, it is, as I like to call it, the scale as you go model. At least our IPXO's marketplace enables company to scale as they go, because again, just like Vincentus mentioned, you don't have to plan for 3 years in advance. You can assign additional subnet whenever you need it. Also, it's way more easier for network engineers to work within /24 ranges, so they don't have to start running around creating more specific initnums and whatnot. Everything is readily available. Also, diversification of IP inventory. We heard stories, especially with, let's say, hosting companies with multiple POPs across the globe, where they would rather have, different registry subnets, different, well, pre-geolocated subnets. I think that's the main reasons why we're seeing this /24 lease trend being here in the first place.
I had heard a couple of interesting trends change over the last just year, and it would be like a good point for your next chart or for the next webinar. This specific chart to see how the number of 24s, or all of these, but specifically the number of 24s have changed year over year, let's say in the last 3 years. And the reason I ask this is because we have a lot of customers that come to us and they specifically want prefix diversity. And mostly the reason for this is web data, right? Scraping web data and AI is, I think, a big application of that. So I feel that 87% number likely was a lot smaller last year and the year before as a percentage of the chart. And it will stay the same, might even grow purely based on, the growth of AI. That's just my prediction, but I'd be curious to see how that changed.
So you're absolutely right, because even a couple of years ago, if we would have some similar slide than we have right now, we would see quite different numbers, I'd say. I remember the days where 22s, 21s used to be, well, among the most popular subnets. They still are, but it's not a competition anymore compared to 24s. And yeah, those specific use cases that you mentioned definitely drives IP leasing within /24 subnet ranges.
And just I have a question just to you, Jake. You mentioned that still a lot of companies are like looking for /16s, but just all the pros are pointing to the smaller subnets, not the /16s for like ISPs, because of like abuse stuff, diversification, and so on. So why are companies still like looking just to overinvest into /16?
Well, the customers that we work with, the ISPs specifically, they're usually large or mid-sized ISPs who still have the benefits of a /16 purely based on just managing one set of numbers and then allocating them quickly to customers. And then also being able to announce the whole /16, like for, I can't remember, it'll come back to me. But just using a 16 versus a 17, there's a big difference in like, for instance, being able to transfer to a sister company. There's one big reason, I can't recall what it is, but they are interested in this, in the larger subnets, purely because of just the ease of saying, we own this subnet, this customer uses this subnet. It's always the same range of numbers. So it's for inventory purposes. It makes it far easier for them.
So probably it has something to do with controlling the whole class B, I presume.
Correct. Right. Oh, there it is. DNS also. So for like the DNS purposes, that's a pretty big problem, because once you go if you break down the 16, every single IP address used for DNS, you have to now break it down to the 24 level.
Yeah.
Actually, we had a interesting question from Alex, and this actually goes to you, Jake, and to you guys, Paulus and Edvinas. Do you believe one day a single IPv4 address could cost $100?
Jake, want to start?
Well, yeah. I look at IP addresses and I compare them to Bitcoin, except IPv4 specifically, has real life application in the world, where Bitcoin is still, in my opinion, just speculation, right? But they both have the same qualities. They're both rare. They both have had a market that's developed quickly. And in my opinion, the IPv4 market is following Bitcoin in that it drives up quickly, sustains, drops, and then now this is the first time we've seen an actual market cycle in IPv4 addresses. So in my opinion, the answer is yes. However, there are two very large potential factors that could change this, and that's, once again, China's requirement to move off of V4, and also the U.S. government, and their control of over 200 million IP addresses, and what they decide to do with those over the next couple of years. But as it sits today, yeah, I think there's a good possibility that IP addresses could cost $100 per IP at some point. But then also companies have to do a cost benefit analysis. Do we buy the IP addresses? Do we move to V6? or do we do CGNAT? And we're doing those cost benefit analysis today at an average of 35. We used to do them at $50 an IP. And even at $50 an IP, it was still worth it to purchase the IP addresses because it's a streamlined process. You don't have to buy new gear. There's no learning curve, and there's no backwards compatibility issues.
You know, the difference between Bitcoin and IPs, that IPs are very much centralized and Bitcoin is is not centralized. So that's the other thing, you know, what we see for, you know, Bitcoin, that actually it came to kind of a helping hand to kind of get out of the monopoly from the big banks. So that's just a
Well, at some point,
interesting fact.
the decentralized system was supposed to also help offset some of the internet traffic, but
Yeah.
it
Yeah,
hasn't.
and I know the guys actually who did a BGP routing on the actual crypto ledger, which actually worked pretty well, and some of the telcos integrated them. But it was interesting to see, you know, how the BGP routes can be stored in that ledger so that, you know, we could increase the routing. So, you know, I remember in back a few years ago, I had a chat with John Curran on one of our webinars, you know, and I asked him, you know, do you believe that IPv4 could be moved in some sort of crypto ledger? You know, which is like, you know, IP is a database, right? Nothing else.
Well, what was his answer?
Well, you know his answer.
I will say, just to,
You can check a
The
webinar.
webinar.
You can check the webinar. Yeah. Go and check a webinar.
I will say this. I think $75 per IP. Well, I think we'll reach $50 per IP. Absolutely. It's just a threshold number, just like I said, with Bitcoin or any other stock. We'll reach 50, but I think we should see $75 per IP prices. If the rate of acquisition continues at the same rate it is today, the number of IPs available and the number of IPs that can be available will not sustain. Meaning, every company that entered the market in the last couple of years did it because they saw the prices rise. That wave already came. And that number of entrants into the market that will allow us to, or that want to sell IP addresses, is decreasing at a faster rate than the demand for IPs is increasing. So the $75 mark in my mind, and we'll look back again in 2 years, is 2 years from now.
So
Okay,
75
so
within 2 years.
today is 11 of February 2025. There you go.
2027 is when we'll be, actually, that makes even sense. 2027
That's it.
dollars.
Let's mark our calendars for the
Yeah.
next webinar. Okay, Paulus, do you have any more slides or interesting information to
I
share?
do, I do. I think I'm gonna skip a few. I will just glimpse through those way faster. So we have IP price change by registry. Not too much movement. Apart from the obvious that APNIC IP addresses might be more costly compared to, for example, RIPE or ARIN, but it all has to do with, well, simply supply within the marketplace. Next up, Ednas, maybe you want to take this one.
Yeah, so we don't have a lot of changes here in the top leases in industries and countries. Proxy industries, drill or data mining, we can sometimes combine them. As I mentioned before, the AI is influencing that market, and they are getting more requests and from AI companies to collect the data. Hosting is also growing worldwide. We see some trends in where it's growing is AI and GPU and gaming hosting. If we just would separate this hosting into smaller parts. Telcos, we see the growth in the growing regions, South America and Asia parts. So yeah, just to be more specific, we don't see a lot of country changes. No new names in our map. We still cover a lot. Those other 25.88, 58%. There are a lot of countries in that part. The biggest part is still United States.
Interesting. Can you go back to that? I have one question.
Okay.
I did not think the U.S. was by far the number one country that leases IP addresses. I think in one of the slides earlier, you said that the number one registry that is leasing IPs is RIPE. Is that right?
Exactly. Yeah, but you see, Jake. That's what even Edwin has mentioned, that even the states, the US companies have a different POPs and multiple POPs, and it's allowed to actually announce the RIPE for IP addresses in Iron region or anywhere else, So, some of them, are looking for diversity. Some of them are looking, for the pricing, it all depends, right? But, if we could say that a trend is that US companies are getting iron, this would be not true.
Well, here's the question that we typically get from our customers, and and we tell them the same thing. You can announce RIPE IPs anywhere in the world. It does not matter. However, a lot of them have told us that they have issues announcing RIPE IPs in U.S. regions because some of the geolocation companies look at the IP registry, not just where it's being announced. Did you see that being a problem often, and how do people
No.
look at that?
No,
No, I
not
would
at all.
say the biggest thing is on which networks they announce the IP addresses, but it's definitely not the case. Uh, by the way, coming back to the last slide, we have the other question, and actually, I'm gonna do some little bit of a different format, where we will not leave the Q&A section after, but as we talk, I'm gonna give you the questions from our audience. And Paul Rendek is asking, on the previous slides that Paulus mentioned, but who is taking the /24s? Are they new entrants, enterprise, or more established classic networks diversifying, as was mentioned?
So actually, both answers are correct, I'd say. As Edmund has mentioned, we have a huge inflow of new companies just registering, just starting out their businesses and, scaling the operation to truly get connected to the internet. But the exactly same pattern can be seen for old and established enterprises. And again, I have to come back to the topic where, we pretty much enabled scaling as you go. You no longer need to, overbuy IP addresses, overinvest in IP addresses. So I'd say it's both.
Yeah,
I
but
will
Mhm.
I will add a little bit to this, and that again relates to the topic I mentioned before. Bring your own IP. So, for example, we have a couple big hyperscalers that are pushing more bring your own IP to the end users, and those end users previously might be used all the services and IPs from a hyperscaler. They need to go and look for IPs. They don't want to buy because they don't know how much they will need and so on. And for that, they just need only /24.
And it's a good case for hyperscaler case because in quite a few cases we see that in most of those elastic environments they tend to lease IP addresses rather than buying them.
Okay.
So just to mention one, we have one big network friend that just probably even last year sent us like tens of, not hundreds of referrals to lease /24 to use their bring your own IP. So that's and that's a growing number. And for example, we just closed Lovable AI this week. That was referenced by that network. So to use bring your own IP. So
And
that's
just
not a
to
small.
kind of recap, Lovable is the fastest European growing company.
Yeah.
Yeah. Anyway, let's move on.
Yeah.
Hold on. Bring back the
Mhm.
other slide because I have the other question from
Mhm.
the same guy, Paul Rendek, who's actually our board member.
Yes,
So
same guy.
he's asking, has the IP leasing became more popular after the hyperscalers charging model for IP addresses were introduced? And the answer is yes. Because one of the largest networks that we actually, and it's growing pretty fast, which is
Mhm.
AWS. And of course, if not mentioning the hyperscalers, also Cogent introduced the price increase, which also reflected the kind of the new customer acquisition from their networks using our services. So, as I mentioned previously, the if the big whales are moving, the IP leasing, it also shakes up the whole market.
Mhm. Yeah, and I guess we can move to towards the outlook for the future, and just to have some brainstorm ideas. I looked into top 1,000 largest LIRs. I obviously excluded governmental entities, I excluded academia, I excluded hyperscalers because, well, those three industries, let's call it, controls a lot of IP addresses, and they potentially will have a use for it. But the rest, 1,000 largest ones, uh, across all of them, they have almost 230 million of unannounced IP addresses, so presumably completely unused. And if we're talking total allocation size, if I remember correctly, it was around 1.2 billion IP addresses. So even from those unannounced IP addresses, theoretically, that's more than $1 billion of annual recurring revenue. Uh, if they would be leased, based on the prices that we're currently seeing. So what do you guys think, is how much space we have for this IP address, IPv4 sustainability to, well, become a worldwide phenomena?
Again, I think it was my previous webinar where actually I spoke with Marco from RIPE, Natalie from AMSIX, and Matthew from TELUS. We, discussed how heavily IPv6 adoption is happening. And guess what? IPv6 adoption is happening within telcos and mobile operators. None of other industries are actually looking into this. What that means? That means that we're gonna see more IPv4 becoming available because those guys have the biggest pools of IP addresses from, the early days. So what I think is gonna happen that we're gonna see the larger pools becoming more available for the market. But it all depends, on how much effort they will put those mobile operators and telcos and moving to IPv6
Mhm.
or enabling CJ-NAT. Let's put it this way.
Yeah,
Um,
but if
mhm,
you one thought there, if you look at global adoption of IPv6 this year, which we did, we updated our white paper, it's not even 50%.
mhm.
If you look at it last year, it was the same, basically the same number. It was
There you
like right
go.
40, 46, 47%. The way we've tracked it, IPv6 growth globally has grown at roughly 3% a year, maybe 4.
And Jake, adding to you, what actually, Natalie from AMSIX sees from their network that only around 5% of traffic payload goes through IPv6, if I'm correct, but it's roughly around that. So that means nothing, nothing.
So, and if you really, really think about it, the telcos, which you're discussing, and that they're slightly shifting to V6. If every large ISP telco carrier, right, tier one provider in the world, if any one of them decides to force their customers to use V6, they're at a huge risk of losing a large percentage of their customer base, even at 10 to 20%. They would just move because they don't want to deal with renumbering. They don't want to deal with new equipment. There's no, it's almost too difficult for any one of these companies to force V6 usage upon their customers. That's the way we look at it, because there's a massive revenue, a possibility of losing revenue for them.
Yeah, and there is another thing that we always say that IPv6 adoption has three major problems. First one is a finance, the second is tooling, and the third one is knowledge. I'm surprised how many of the network engineers don't even picked up on IPv6.
No,
You see some enthusiasts actually, posting their things what they have achieved within IPv6, but some of them even have no clue about it,
Mhm.
no.
which
And
is,
many network providers that are building V4 in like rural America, or building network in rural America, they only build in V4. They don't even want to try to do V6, and
yeah,
that's
same in Europe, same in
Yeah,
Europe, same in
same
Europe.
exact story.
Yeah, yeah, exactly, exactly. Yeah.
And I imagine in most cases it's not, that easy to justify the needs of investment towards renumbering if you are not dire need of to do that. For example, if it doesn't touch your operations, in some cases, if that doesn't influence your stock prices, what's the point in investing in something that works just so it would use a different protocol altogether?
right. And the knowledge base. And
Oh yeah.
and look, V6 has a really practical application. I think you said we're going to get into this later, but the differences between V4 and V6 and pros and cons. But V6 is not very friendly in the network
Mm.
side of things. But in IT, it has a massive application, right? IT people love using V6 because of its security and its vast abundance. But in network, nobody really seems to like it, and they want to stick to V4. And there's very obvious reasons. But like I said, even though V6 is free and V4 will be at $50 an IP and $75 an IP, there's still that equation of the how fast can somebody learn it? How much are we going to have to invest in new gear? How many customers are we going to upset? And how many potential issues will it cause with reverse compatibility? Right, and that's really difficult to quantify.
Hmm.
Started.
Absolutely, absolutely, agree. Yes. So we we say that we are still on the same pace with IPv4 addresses? And in my previous webinar, we kind of agreed that yes, we are at the same pace, and things are actually stalling with IPv6.
Yeah. And in fact, we did more individual transactions, so like just individual subnet transfers or sales last year than we did in the previous 2 years.
Hmm.
And that
Interesting.
it doesn't show because of the total number of
Mhm.
IPs, but the individual transfers of 24s to 19s really made a massive impact last year as compared to the 2 previous years. So as far as we see it, and by the way, I forgot to mention Cogent, right? Cogent
Mhm.
uh, securitized, $206 million, I think it was, of IPv4 address.
240 million.
So,
Yeah.
right, that was a massive revolutionary move in the industry. We
Mm-hmm.
still don't we
It
still
was a.
we still don't even know the impact of it yet, right?
Mm-hmm.
Because nobody else has done it. But certainly, when that happened, we had an influx of customers with a very large number of IP addresses ask us how they could do something similar. Obviously, Cogent pioneered that market. They started out at really low prices just to get as many customers as they could, and then they had the forethought of creating a revenue base based on IPv4 leasing, and then doing something with it, and they executed it perfectly. And
So by the end of the day, have you secured
Actually,
that note?
I actually have not followed up on that, so I'm not quite sure, but I do know that they did increase their prices a lot. I think
Yeah.
they almost
Mhm.
doubled their IP leasing prices,
Exactly.
Mm-hmm.
They did.
Yeah.
and they're still successful, right? They're still leasing IP addresses. So that was another big impact in the number of IPs that once again will be available, because they're only going to lease. They're not interested in selling
Yeah.
as of
Yeah.
now.
Yeah. Absolutely.
And the number of available IPs will tremendously decrease this year in the market as far as availability goes. So the popularity of V4, whether it's purchase or lease, is going to increase either way. Because if you can't buy them to purchase, or if they're too expensive to purchase, you lease them, right? As long as they fit into that business model. So it's the CapEx versus OpEx. And we always talk to our customers about that. Obviously we're partnered with you. And we always will refer our customers to lease IPs through your platform because of its ease of use. And this year, and my prediction, I think both prices will increase. So it's just a matter of when does the U.S. government release, or when does each state release the funds that were given to them by the U.S. government. Some of them already did it. Some of them, it could take them another year. So once those funds get released over time, the influx of demand will increase very quickly.
Excellent.
Let's see. Let's see how it goes. Paulus, what
Wh-
other
what's on agenda?
what's
So
what's on agenda
yeah.
next?
So this
That's
is
funny.
actually my last slide. So, we can have this sort of a discussion. What could be those third party factors that could increase it? And it doesn't have to be, leasing, buying price. And well, Jake already mentioned, if I can count correctly, at least three out of 5 points. Uh,
By the way, I didn't even see this when I started
exactly,
speaking.
exactly.
I didn't even see the slide. And then I just looked down and I was like, oh, I just spoke about all those things. My mistake.
So that's good. That's good. That means, the slides are exactly on topic.
Pretty
Uh,
synchronized.
Yeah, yeah.
Yeah.
Edwinas,
It's
I
AI.
know.
It's AI. It's AI.
And
I'm
actually,
not,
this is something
I'm
that
not real.
I know Edwinas has to mention about AI data center investments. And we noticed this, during the conferences we recently visited. The topic is really hot, even telecommunications conventions are becoming mostly AI data center, cryo cooling, and power driven.
Yeah,
Uh,
so you remember at PTC, this was not a telecommunications conference. This was a data center
Yeah,
conference.
PDC, Pacific Data Center Conference Council.
Council.
Yeah. Yeah. So,
Yeah.
Edwinas, what had you say about those AI data center investments?
Yeah, so everyone is investing now in that area, just not only big hyperscalers, but we see that trend is with the localized LLMs are coming into like smaller hosting companies. They usually have like even a separate product line, AI or GPU hosting, where everyone can host their own AI now. And I think this trend will even grow with the open source LLMs released. And not if you don't want just to put that on a local computer at your home, if it's not that powerful enough, and you want to have your own ChatGPT, you will probably host that information. And I think that's going to be powerful for companies, for businesses, where they will like build their own AI. Even we are building for our abuse abuse management. So everyone will start, I think, doing that, and this is where like this AI GPU hosting is going to be a big thing.
So I have some information that I can't really talk in depth about, but there are some states in the U.S.
Come on, let's make the
Yeah.
webinar special, you know.
Yeah.
All right, I'll give you as much information as I
Spill the
can.
beans. Spill the beans.
Okay, there are some states in the U.S. that have a large demand for data center builds, but there's not enough power
Mhm.
to support those data center builds. Very few people know about this, and these states are trying to find a way to power these data centers, but the investment dollars are already available to those data centers, and it's lots of data centers. It's not like 10. It's, I think, closer to like hundreds of data centers that are not completed yet because they don't have the power to drive the growth, and it's really going to be largely driven by AI. I mean,
You
that's
know,
that's
it's a deja vu. It's a deja vu for when Brexit happened, you know, in the UK, and when actually lots of companies moved their infrastructure to Frankfurt. So Frankfurt was the city where where they had no power to maintain, you know, the intake of the data center demand.
Mhm.
I'm not sure what they've done, but it was enormous demand for the data centers. Not about the AI, but I remember talking with one of the large data center campus network, and we told me, here you go, we're gonna build 12 campuses up here. And when it's gonna be completed, well, 12 campuses we're gonna easily build within like 1.5 years. Okay, so we like won a few racks up there. They all been sold out already.
And
So
actually, I know that this is still the case for Frankfurt. You
Mhm.
can't really build new data centers there. Well, you can, but the power scarcity is a huge
Yeah,
problem there.
yeah, so we definitely gonna see, you know, since you know the roads are electrifying, you know, electric cars, data centers, the compute for AI is definitely a big demand, etc., etc. We going to run into the power grid capacity
Mhm.
problems. This is where I think, you know, the biggest obstacle we're gonna see for the next probably decades.
Yeah, and the most highly dense states or areas where there's connectivity are have the least amount of power available. And if you build somewhere else where there's power and maybe even the power costs are low, there's not enough
Mm.
connectivity.
Mhm.
So there's just it's a problem in both in both cases.
But hey, the good news that it's evolving. So we
Yeah.
definitely understand, you know, the problems, and I'm sure that, you know, the guys from the governments and city councils will pick up on that. So I
Mhm.
guess let's Let's focus on our things we have to develop, right? But yeah, on the big picture, it's definitely a case. It's definitely a case. Right. And we have a question from Paul again. And from what I understand, options seems to be what the industry is looking for. Is that what you heard and experienced?
I think Paul has in mind, leasing versus buying and the OPEX versus CAPEX model that we already
Hmm.
spoke about. So yeah, it all comes down to a financial model. Companies want to work with IP resources, whether you want to own them and, put the money up front, or you, well, are treating it as a simple utility bill that you get every month. You pay for power, you pay for connectivity, you pay for the IP resources that you use. So this is exactly that, maturity of IP leasing market, at least in my head. And this is, the new choice, the new options that companies has whenever it comes to IP resources.
I think that it also comes down to the business kind of model or setup they want to have. If they not gonna change their networks, for a very long time, they
Mhm.
probably want to buy those IP addresses and forget about it, right? But if we talk about, more kind of dynamic environment, right, where we have, let's say, hyperscalers world ecosystem, right? This is where I think, companies want to have more flexibility, on moving around. And right now, what we see on as a big trend is the like a hybrid cloud, where we want to offload uh, the cold storage to some alternative providers, where, let's say, the biggest compute powers, they want to get, let's say, from the hyperscalers, or even from the alternative providers that actually, have a better price for, let's say, if they need a GPU compute. So it's definitely comes down to the business model.
Yeah, but in either case, there's one just important topic is if somebody leases IPs using their upstream provider, from them, or they lease it from one of their hyperscalers, they're stuck. Versus leasing it from IPXO, they can move them around freely, and that's a really important part of this whole process is having flexibility. I think that's important to mention.
Uh, Perhaps
Definitely.
Harley Davidson marketing campaign would fit IPXO more freely. Okay, so I think we had a very interesting conversation. Jake, thanks a lot for joining our webinar, and it's good to hear and see you again. Then I would like to announce the next topic for our next webinar, which is going to be more technical from uh, various perspectives. And we're going to have BGP leaks, hijacks, and abuse. How far are we fixing the internet? So we're going to have very interesting speakers from the top cybersecurity and network companies who's gonna answer that question: how we going to fix the internet? And for today, thanks a lot, everyone who joined our webinar. Thanks again, Jake. Thanks a lot, Paulus, Edvinas. Stay connected and follow us for more news. Thank you.
Thanks, everybody.
Thanks, everyone.
Bye.